Hello friends, James Stevenson here, posing the question to you, is Tesla 90% overvalued? Is Tesla's revenue in decline? These are the serious questions being asked by the leaders of the Tesla Q movement. I'll feature two of those for you in this video. The person posing under the fake name Brad Munkin, and then Jon Bryant. I don't know if Jon Bryant's real name is Jon Bryant. I have no reason to believe it isn't. But let's check in with my co-host Loki, who still has not eaten his breakfast yet, but is making a pretty good dent in his big, soft, comfy bed right now. You may hear him bark some when he hears noises outside. He's just trying to protect the house. Buddy, do you want your breakfast? Breakfast? Okay, I'll position the camera, assuming that he's going to eat his breakfast. And then when that happens, you'll see it in the Loki's bed cam. So let me share my desktop with you and show you a tweet from the aforementioned Brad Munkin. Now, I just made a whole Duncan and Munkin video, so this one won't be that. I'm mainly going to focus on Jon Bryant in this one. So what was this? Just 3 popcorn emojis. To go with my tweet, the second tweet from my 69 tweet Tesla earnings forecast thread that I tweeted out on the 11th of September, saying Tesla will break all previous production and delivery records in 2023 by a wide margin, as they've done for many years now, and then they'll do it again next year and the year after that and the year after that, with the rocket emoji here. Finishing by saying the growth story is really just getting started. Who doesn't believe that? The person posing as Brad Munkin doesn't believe that. And Jon Bryant doesn't believe that. What did he say? He says revenue flat to down, but it's bullish somehow, I am sure. Now, is Jon Bryant right? Is revenue flat to down? Well, I had to reply and say, where do you get your information, John? Here is a chart from the same thread, the 18th tweet in that thread, showing Tesla's quarterly revenue since 2009. The growth story continues. So if you haven't seen this chart before, I did cover it in more detail in my forecast review series. So go check that one out if you want to see it. Maybe around, part, I don't know, 9 or 10 or something. Go check that out if you want. So John says his source is the Tesla 10Ks and 10Qs. Plot Q4, Q1, and Q2 23 revenue, and you'll see that the revenue is flat to down, just like I said, is what he means. And then Brad Munkin helpfully chimes in with his chart that he made, captioning it with something I'm not going to read. He titled his chart Tesla Price Cuts. Revenues flat with Q4 2022, while deliveries at new record high. So what kind of revenue does he show here? Well, he shows automotive revenues only. That leaves out Tesla's energy division. Conveniently, he has conveniently excluded services and other revenue and energy revenue from this, limiting it to only Tesla automotive revenues. And I don't know if he threw out the regulatory credits too or not. But that's what the blue bars are on this chart, courtesy of the person pretending that their name is Brad Munkin. And the deliveries are going up here, so this is meant to say, hey, revenue per delivery is on the decline. I replied, what, was this chart too nuanced for you? Showing another chart from the same thread. So the 12th tweet of the thread has my chart with Tesla automotive revenue and cost of sales per cash delivery. So you can see the red bars do decline from about 55,000 per vehicle to about 48,000 per vehicle as the deliveries continue to rise over time, right? So I'm forecasting these last two. These haven't happened yet. Q3 may not be down. Probably it will be, I think, which is why that's what's in my forecast. But then we'll set another all-time record for deliveries in Q4, and I think the revenues are going to recover a little as the costs should be better for the rest of the year on a per-vehicle basis than they were in Q1. All right, but that's too nuanced for Jon Bryant. He wants to go back to the main point and ask where he got his data from. Now you should see, secondly, you're hyping up with a flat out to down revenue. Do you believe that is bullish, even Tesla's price to earnings ratio? So he wants to talk about revenue and PE ratio now. Flat to down revenue. So here's Q1 and Q2 of 2023. It's almost as much revenue as Tesla made the whole year of 2021. So, less than 2 years ago, Tesla turned in Q4 2021 results. So these results were reported in Q1 of 2022. Last year, to start the year, Tesla reported a year that they made $53,823 million of total revenue. In the first half of 2023, they've already made $48,256 million. But Jon thinks I'm deceiving people with the layout of this chart. He thinks that what matters is sequential revenue. So he says, I know this is probably your first time closely following a growth stock. However, you pick up growth slowdowns in the sequential data first. Sequential is more important, Jon says. If there's ever a quarter that had less revenue than the one that came before, that means the growth story is over and there's a demand cliff, is what Jon Bryant's trying to sell me. Revenue fell from Q4 to Q1 and rose slightly in Q2 2023. Slightly rose in Q2. But about flat with Q4 22's level, about flat. It was up, but we'll say it was about flat. Units rose, but operating margins collapsed, bullish or no. So I had to reply, I know you're among the worst stock valuation analysts alive, and he is, and we'll get to that in a minute. But seasonality exists. Seasonality is a thing. He's trying to tell me revenue fell from Q4 to Q1 as though that's meaningful. So Jon asks, is that what's happening now? I said, did you even bother going back and checking how many times in the past revenue declined sequentially from Q4 to Q1, only to end the year up more than 40% year over year before concluding that it must mean the growth story is over? And I'll show you that right now, because I'm fired up at this point. This is me fired up. I'll get to the 12 trailing month version in a minute. For now, let's talk about this brand new chart that I made for this video. This has never been tweeted before. Maybe I'll tweet it a little later on. Well, I won't be able to publicly post this video for a long time, so my subscribers are going to see it before that tweet probably, but if you're in the general public, you will have seen the tweet long before you see this video, because I have so many parts of my forecast review series that I have to publish, making public one per day, through the 2nd of October, so it'll probably be October before you see this video. I'm recording it on September 23rd, and that's the day that I'll upload it to my subscribers on Patreon or on X. So what do we see here? Well, in Q1 of 2018, Tesla made $3.4 billion worth of revenue. This is a very simple chart. It's total revenue reported by Tesla each quarter. So you're seeing every quarter individually here. What happened from Q4 to Q1 of 2018? Revenue fell from $7.2 billion to $4.5 billion. What happened from Q4 2019 to Q1 of 2020? Revenue fell from $7.4 billion to $6.0 billion. What happened from Q4 of 2020 to Q1 of 2021? Revenue fell from $10.7 billion to $10.4 billion. We had one that went up by $1.1 billion. I think early 2022, this is when Tesla was trying to take more pricing to throttle the backlog. So the deliveries may not have been any higher in Q1 of 22 than they were in Q4 of 21. I'd have to go back and look to be sure. Maybe they were up a little. And then what happened Q4 of 22 to Q1 of 23? Well, Jon has already told us that revenue declined, and that meant the growth story is over. From 24.3 to 23.3, that was a $1 billion decline. And then he said Q2 was about as much as Q4 of 22. You know, up more than $500 million. But what's $500 million between friends? I'm going to call that flat, he says. Okay, so that's what happens with seasonality. Seasonality means that some quarters you make more revenue than other quarters. This is true for the auto industry at large. Now, it's harder to see on the legacy automakers' P&Ls because there's a time lag between when they sell vehicles to the dealership and when the dealership sells those vehicles to retail customers. But if you look at the retail sales data, Q1 is a weaker quarter than Q4 is. All right, we'll go back to the thread and continue schooling Jon Bryant. I read you this one already. And I read you this one already. Is it just seasonality, or is it the massive price cuts? Do you think the 40% decline in operating margins is seasonality? It's okay to have a thesis, but then you have to test it. Oh, I'm going to get lectured by Jon Bryant on testing my thesis. Do you believe this is about seasonality, Q3 revenue, quarter-over-quarter growth? I'm sorry for laughing, but this guy is one of the worst stock valuation analysts I've ever seen on Twitter, and I've seen some big dummies. If you're ever tempted to believe Jon Bryant when he says Tesla is 90% overvalued, have I got something to show you before the end of this video? So I said it is a reductionist fallacy to believe any financial outcome was caused by a single catalyst. So sometimes people like to attribute all of the operating margin decline to a single cause. That's called the single cause fallacy. There's dozens of variables in play that determine financial outcomes. And it takes nuanced analysis to tease them apart and understand them. Jon Bryant would prefer to just say, there's no demand, the growth story is over, there's a demand cliff coming, and the price cuts mean Tesla is doomed, right? That's his operating theory, and it has been for 5 years, or 4 years, or whatever. So he says, let's try again without the word salad. I guess he didn't understand my sentence here. That's all I can figure, is that he didn't understand what it means to say that it's a reductionist fallacy to believe any financial outcome was caused by a single catalyst. I just explained it to you, so you've got it. Jon Bryant, I guess, would have benefited from hearing that explanation because he thought it was just word salad, meaningless MBA words. Do you believe that the revenue declines have primarily been caused by seasonality or by price cuts or some other driver? So I said, let me try again using smaller words. Winter cold, snow in winter, make road icy. People no like buy car in winter. Tesla make cars. Cars go fast. People like Tesla cars. More people buy Tesla cars. Economy bad. Inflation high. Fed no like inflation. Say raise rates. Rates go up. Car loan payment go up with rates. Make fast car cost more. Tesla see rate. Make payment high. Lower price so more people can buy car. So I hope John got it when I used the small single syllable words here. But we'll never know because all I got was I love lamp here, referencing Anchorman. Steve Carell in Anchorman famously said, I love lamp. Go watch Anchorman if you haven't seen that before. Okay, so what was that other chart? Well, the other chart, this chart, as you will recall, features quarterly revenue only. Each one of these numbers is telling you how much revenue there was during only that quarter. How do you strip out seasonality, though, if you're a thoughtful, careful analyst who's trying to figure out, okay, but if there weren't seasonality, what would the numbers look like? There is a way to do that, and the way to do it is to use a trailing 12-month average. I do this a lot. If you're familiar with my charts, you'll know. So this is the same data that we saw on the other chart on a trailing 12-month basis. So if you just add up these four numbers over here, 3.4, 4.0, 6.8, and 7.2, you'll get, about $18 billion, right? You get $21.5 billion. What happened here? What did I do wrong? So that's 14, and this is 18, and that's 21.4. Yeah. All right, 21.5 with rounding. Okay, I can do math. So that's what I've done. And then for this one, what we're doing is we're including Q1 of 2019 and we're throwing out Q1 of 2018. So every new bar is adding or subtracting the year-over-year change for each quarter. So let me show you what I mean. The Q1 in 2019 was $4.5 billion. That was a lot less sequentially than $7.2 billion, which is where Jon Bryant wants you to focus. But it was up $1.1 billion versus the prior year same quarter. So if we add the growth year over year of $1.1 billion to this 21.5, you get 22.6. I'm glad the math worked out for that example. Sometimes with rounding, it won't come out to the same exact number with decimal precision because sometimes the numbers are both big numbers. You know, they'll both be, you know, after this decimal point, they'll both be a 4 or something. And then it won't look like the math adds up right, but it does if you go to the full decimal precision. Okay, so what's this trend doing? Well, they're both doing the same trend. If I'm being honest, both of these charts are showing up and to the right growth. You shouldn't have needed the 12 trailing month chart to see the trajectory here is up and to the right. Even when you have a quarter that's down, look how much this quarter was up versus the prior year same quarter. It was up $4.5 billion from here to here, right? So when you see Q1 of 2023 on the 12 trailing month chart, here's Q1 of 2023, you see it rise $4.5 billion, 4.6, from 81.4 to 86.0. What do we see in Q2? Well, that's wrapping on a very low Q2 of 2022 caused by the Shanghai lockdowns, limiting production out of that factory. So that's what's happening there. Q2 of 2023 was just way stronger than the prior year Q2. So it added a lot from 86 billion to 94 billion, up $8 billion year over year. And this is the number that Jon Bryant should be forced to explain. How can you tell people that Tesla's revenue is flat when this is the chart of Tesla trailing 12-month revenue? All right, I have more to cover before this video is over. That should have been the exclamation point on my video, but instead, I'll show you what you should search on X if you ever think, maybe Jon Bryant is right, maybe the growth story is over, maybe the stock is overvalued by 90%. Well, go to your search bar in X and type into that search bar @ Jon Bryant 421 space 90 space overvalued. And what you'll see is a collection of all the times Jon Bryant said Tesla is 90% overvalued. So here's one from April 30th of 2020. I'm going to reference a stock chart here. This is Tesla stock from 2019 over here through the current day. Tesla closed at 244.88 yesterday. Who knows where it'll be when you see this video, but that was the most recent price. At press time, what about April 30th of 2020? Can I find April 30th? Yes, here we go. The closing price for Tesla was $46.76. So if Tesla was 90% overvalued at $46.76, Jon Bryant is telling you the true value of Tesla per share, less than $5. That's what professional analyst Jon Bryant came to as his conclusion in this tweet, inescapably. What he said on April 30th, 2020 was, Tesla is 90% overvalued, trading at a $46 valuation, adjusted for splits. The stock split in August of 2020 and again in August of 2022 for a total of 15x. So people who have owned Tesla shares since before August of 2020 have 15 times as many shares now as they originally purchased, owing to stock splits. So what he said here was the market cap for Tesla should not exceed $5 per share. What do we have here? July 13th of 2022. Still, the stock is probably 90% plus overvalued from here. Let's look at July of 2022. Where's July of 2022? July 13th is back here. Okay, so Tesla stock closed at 240.07. So here he said Tesla was worth $24 per share, 5 times as much as he thought it was worth. Either that or he's just lazy and always thinks the stock is 90% overvalued. All right, let's look at some more. How many times has Jon Bryant tweeted that Tesla is 90% overvalued? Here's one from March 5th of 2020. Tesla stock is 80 to 90% overvalued. So here's March of 2023. Yeah, there you go. Tesla was trading at $301. So at this point, John was valuing Tesla at $30 per share. That's how much he thought Tesla was worth. July 1st of 2020, Tesla, flat demand would make Tesla 90% overvalued. So we'll look at that. July 1st of 2020, that's back here. July 1st, there you go. $61. So here, John said Tesla was worth $6 per share. Here's one from May 31st of 2020. Tesla is at least 90% overvalued from the May 31st valuation. So that was a closing price of $59.04. So here John said Tesla is worth less than $6 per share. March of 2022, again, Tesla is 80 to 90% overvalued. May of 2020, Tesla will never have high margins and growth will disappoint, so it's about 90% overvalued. He said that to me in this tweet. Did I say something smart back to him? Oh, he said that to here for the comments, I guess. All right. So Tesla will have limited growth and low margins. It is wildly overvalued, 90% or more, he said in May of 2020. In June of 2022, he retweeted an account that blocks me and said, bulls need almost fairy tale perfection and Tesla is still overvalued. Anything less than perfection and Tesla is 80 to 90% overvalued. June of 2022, that was where? June. Yeah, here at $87. So that means his stock price target for Tesla was less than $9. The inconvenient truth from June of 2020 is that Tesla is 90% overvalued and can't sell cars without continual discounting. And the last one, to me, an 80% decline doesn't preclude a 90 or 95% decline. Also, Tesla could fall 80% and stay overvalued. From October 6th of 2022, less than a year ago, Jon Bryant was saying, here's October of 2022, Tesla was trading at $204. So, yeah, this was a $20 stock price target implied by Jon Bryant's tweet here. Replying to me, I asked him, what's your earnings forecast for 2023, John? And he said, I don't have one. It's irrelevant at Tesla's valuation. Tesla is valued as if it will dominate the auto industry. I mean, this just confirms Jon Bryant is shooting from the hip. He talks like an analyst. He uses numbers in his tweets. You think maybe he has done some homework, but he's telling you, if you listen closely, that he hasn't. He just tells people all the time Tesla is 90% overvalued, even when that would give Tesla a PE less than 1. He doesn't care. All right. And that is my video for today. So I'll check back in with Loki, who has not ventured over to eat his breakfast yet. And I'll outro and say if you've enjoyed today's video, click the like button. If you're not subscribed to my channel already, why not go ahead and subscribe to my channel? If you're watching me on YouTube, you can do that for free right over here. If you're watching me on X, you can do that for $3 per month, which is 69 cents per week. I would appreciate it if you find these videos helpful. Give this video a like wherever you're watching it. Thank you to everyone who supports me, whether you do that on Patreon or on X or by joining my YouTube channel as my executive producers Kathy Kitchler and Rebellionaire.com did. And I'll see you in the next one.